How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for November 14, 2017. Excuse me, here's a snapshot of the currency pairs and the positions that the institutions are holding right over here. And here's a nice shot. Nice cozy shot that makes me think about winter. And so let's get into it. Let's get into gold and take a look at what the institutions are doing with their positions. So we've been waiting to see if there's going to be some signs of the institutions coming in with some buying power at this monthly area of demand that just hardly made a consolidation away and did not make a 2-to-1 move away, but is still a demand area because it removed this area here and also a 3-month trend line. So to me, this is a very important area. So remove a very important trend line, and we've been marinating just sideways within this area. So I've been looking for signs that the institutions were going to take this to the upside. I had a very strong feeling about it, and I've been just waiting for it to happen. And so we can see by this last week that the institutions made something happen. Now, it's not represented on this report because this November 14th takes us into Tuesday of this candle. All right, so this push upwards could have been from Tuesday afternoon, Tuesday evening, Wednesday, Thursday, or Friday. Most likely that's the case. So what do we see leading into this big candle, green candle here on the weekly? Well, we see that the institutions were very aggressive with their longs, all right? Very aggressive. Now, they used to be even more so right here back in September, 350,000 positions. And that was when price first came into this monthly area of demand. So they're still very aggressive. Shorts are very cooled off, right? With 76,000 positions to the short side, 271,000 positions to the long side. The long exposure is at 78% right now, and net positions is 195,000. So basically over the last 3 weeks, actually 4 weeks, there hasn't been much happening in terms of their position. And that would coincide with 1, 2, 3, these candles here. So just consolidation to the side, and holding the aggressive long positions, and shorts remaining cooled off. So what I believe we're going to see on next week's report is longs increasing, and what will be interesting to see is how they're going to play this next phase, because what we're going to be heading into right now is a weekly supply zone. All right, so they could play it two ways. They could play it where they're increasing longs and shorts at the same time, and then when they get here, they continue to add shorts, giving them a better entry for their longs, profit taking on shorts, and then a move to the upside. Or they could just be, they're one way or another, they're going to be increasing longs because there's not going to be any other way to get price up here. So they're going to be increasing longs. They could potentially be closing off their shorts until they get to about this area up here before they hit the supply, and then they start adding shorts for the move downwards, and then they'll find support, they'll shift the momentum, and they'll shoot price to the upside. So one way or the other, what's going to be happening is they're going to move price upwards. There's going to be a reaction to this area, and then eventually a move to the upside. That's what I see by looking at the technicals, and so far the COT report is showing us that they're very much bullish bias, so I'll be waiting for some type of maneuver like that. I'm looking to get in this one long. I'd like to get in long somewhere down here, and there are some possibilities of some good setups that are going to be happening this week for me to be able to do that with little risk and big rewards. So I'll be waiting for those setups to happen. They should happen early in the week, and then I'll take advantage of them when they do. So let's take a look at oil. What do we see for oil? They increased their long exposure from 758,000 to 778,000, and in so doing they also dropped their shorts from 213,000 to 182,000. So shorts right now are entering into very cooled off territory. Okay, we know that because the coloration of the sell is blue, and this one here is extremely red. All right, very, very strong bullish bias. 81% of their overall exposure is geared to the long side. Now, we knew that we were going to be seeing a reaction to the downside because we were hitting a weekly supply zone. What I'm still waiting for is a move all the way down here to this weekly demand zone. Now, is that going to happen? It may not happen, and here's the reason why. Because this weekly supply area that we're reacting from is not the greatest area of supply, because there was a lot of trading that happened in that area. So that means the institutions could have been able to fill all of their supply before the move happened to the downside. Therefore, when price gets up to these areas, there's not that much supply to be filled any longer, so we get a small reaction to the downside and possibly just a move up from here. That's a big possibility. I'm not going to take that chance. I do see that they're very bullish, but that very bullishness was right here with the candle rocketing up into weekly supply. So that's what they would need for price to head up higher. They need a lot of long positions. So I'm going to still continue to wait this out, because ideally I want to see a drop in oil down to that weekly area of demand, and then it's down here where I will be very excited to get in long. So waiting for that to happen, but all signs right now are looking really good, really positive. I'm just going to be, like I said, waiting it out to see what they're going to do. All right, US dollar. So this one's a tricky chart. They dropped their longs, they dropped their shorts. Shorts still remain aggressive. Short exposure pops up 2% to 52%. So now there's a slight bearish bias, but based on the coloration of the cells, there's been a bearish bias since June. Okay, and it has not gone away since June. So reacting before hitting a weekly supply area, mainly due to the fact that we have other currency pairs that are correlated with this that are hitting their respective zones. So we got a sloping monthly 20 EMA here, right? It's hard to say right now what's going to happen, because we're in between a weekly area of demand and a weekly area of supply. So when we're in between zones like this, I mean, anything can happen. It can react from here and hit down here and then go down here. A lot of things can happen. I think over the longer term, we're going to see a drop down to this area here. That's what I do think, and I think there's a very good chance that we'll see a reversal of momentum and then a move to the upside from there. But that's months away from now. Short term, what I see is that there is a bearish bias, and that there's just a slight bearish bias when looking at the numbers. Net positions negative 2.7 thousand, which isn't much, but again, my indicator tells me that the bearish bias hasn't gone away, even when they were at 50-50 short and long positions. So I'm waiting on this one. I'm not looking to take any trades on this one as of yet. I do have a bearish bias on this, so I will wait to see what the institutions do. And I'm also using this as a very good learning lesson. I like to watch opportunity. I like to have opportunities like this to watch and see what happens, and see how price plays out, and see what they do with their positions, and figure out why they're doing what they're doing. Okay? So let's get on to the next one, Aussie US dollar. So I got tricked on this one. I was tricked because I opened up a basket of long positions based off of this zone, and this week I got stopped out because the zone broke through. So excuse me, let me take a sip of my coffee. So supply and demand is unbelievable. All right, supply and demand is what dictates market price action, period. Nothing else moves market except for the big players and their supply and their demand. End of story, bottom line. There is no ands, ifs, or buts about that. So for me, understanding supply and demand is essential to become successful as a trader. Now, there's many strategies out there that can put the odds in your favor to make money, and there's professional traders out there that do so on a consistent basis, and that's great. But to really understand the markets, it's, in my opinion, that you have to understand supply and demand. And supply and demand can tell the story of price action about 80% of the times, from my experience. 80% of the market conditions can be foretold by understanding supply and demand. But then there are that 20% of situations where the market is reacting to areas that seem to be unrelated to supply and demand, and certain scenarios play out that seem to not be dictated by supply and demand. So it has been my quest over the last couple years to learn as much as I possibly can from scenarios like that, and I have learned a lot. And losing money on this Aussie trade was a great thing for me, because I learned a really important lesson from this Aussie chart. And so, just a little tip, some advice from me, something that I do regularly, is when I learn a big lesson from the market, something that just is one of those aha moments, like, oh wow, look at that just happened and I overlooked that, but I should have caught on to that because I've seen this scenario numerous times through my experiences. So let's make note of that. So I have a book that I keep where I put all my little nuances to my trading rules, things that I've discovered, things that I've noticed, things that play out with a high degree of accuracy. And so I made a note on this specific scenario in my notebook, what I learned from this situation. Because was price hitting a weekly demand zone? Yes. Was there good chances that price was going to move up from that zone? Yes. Do I now understand why it didn't respect that zone? Yes. So anyways, just wanted to pass that on to you. So taking a look at the data, what do we see? We see that the institutions are still heavily long biased, even though in the last couple of weeks they decreased their long exposure. We can understand that, right? Because price was dropping from a weekly area of supply, which we knew price was going to react from way back here. So price dropped from a weekly area of supply, and now it has broken through a weekly area of demand. Now we're hitting into an area here, a really nice monthly imbalance. Okay, a really nice monthly imbalance that removed a really nice area of a weekly imbalance. Technically it wasn't supply based on rules, but it was a very strong drop from that area, so it can't be ignored. And now we're heading back into this area that caused the removal of that area, and there's a trend line there. So it is my belief that we're going to see momentum shift. Price can actually come down here to this area where it's marked in yellow, momentum shift, and then a move to the upside, or it can even react from this area here, momentum shift, and to the upside. So we do know that 72% of their overall exposure is geared to the long side. We do know that their net positions is positive 44,000, and we're hitting an area that removed an imbalance on a monthly chart with an upward trend line. So I believe they're going to take price up. Alright, so just like I believe the US dollar is going to drop, I believe this is going to be an explosive move to the upside, because this was the last piece of strong resistance that the institutions had to remove before clearing the path for momentum to move to the upside. So I'm going to be watching this chart like a hawk, because I want to be watching for that momentum shift. And then when the momentum starts to shift, I'm going to be looking for the long setups, and then I'm going to be pulling the trigger to get in long again. So am I worried about losing money on this trade? Not one little bit. In fact, I'd pay double for the lesson that I learned off of this chart. Okay, so US CAD. What do we see with the US CAD? We see that the institutions dropped their long exposure from 24,000 to 23,000, no big deal. And they also dropped their short exposure from 75,000 to 70,000, no big deal. So kind of balances out, because if you take a look at the institutions' short exposure and long exposure, it remains the same, 75% to the short side. So Net positions dropped from negative 50,000 to negative 47,000. And right now we're hitting that downward sloping trend line, or downward sloping 20 EMA, reacting to this area of weekly supply. So remember on the US dollar chart, the Dixie, we saw price falling short of hitting that weekly area of supply. Well, this is one of the factors of why it actually reversed before hitting that supply, is because the US CAD hit a supply zone. And remember, what we've been looking at over the last few weeks is the US Swiss franc hitting that monthly area of supply, right? So the US Swiss franc was like essential in dictating what was going to happen with the US cross pairs. It hit that monthly area of demand, price reversed on the Dixie, and now it's hitting the monthly area of supply, and price is dropping, just like it is on the US CAD and on the Dixie. So very important to note that. Right now, 3-month area of supply demand is in control on this one, but it's been hit twice, a test here, a deeper test here. So pretty much all the demand in this area has been gobbled up. So is there a chance that price moves up here to this monthly area of supply? Yes, there's a chance. And then the drop, very, very big chance of that happening. Or can it just consolidate sideways and then drop? Yes, it can do that. Taking a look at the COT data, there definitely is that bearish bias. So there's no doubt in my mind that that could definitely happen with the US CAD. So I'm not looking to take any setups right now because there isn't anything very strong, but I'll tell you one thing: if I see some really strong areas of supply coming in on the daily chart, and I see the Dixie showing really good signs that price wants to start making that move to the downside, then I'll be looking for positions to take advantage of that move to the downside. US Swiss franc, like I mentioned, hitting monthly area of supply, and so now we're getting that drop in price. But taking a look at the data, there's a different story being told here, right? We see that long positions are very aggressive. So let's understand, why would they make their positions aggressive? Well, this data represents 1, 2, 3, 4. 1, 2, 3, 4. This data represents this candle, and this consolidation candle. Okay, those 4 candles right there. And so what do you see in those 4 candles? A big thrust to the upside, and then consolidation sideways with a little bit of a sign of supply coming in, right? So what do we see? Supply was cooled off. What happened now? Starting to get aggressive, right? At the highs, within supply. So long exposure is 71%. Net positions is a positive 27,000. But we're still at the highs. This data represents us deep within supply. So what I think is going to happen, based on what we see in the last weekly candle here, is next week's report is going to show us that shorts are going to increase. But what I'm going to be watchful of is what they're doing with their longs. Okay, so they needed to add a lot of demand. They needed to fill in a lot of demand to get price to move up into supply. But now they're there, they've consolidated, now what? All right? I believe we're going to start to see that long positions are going to start to decline, and the short positions are going to start to increase. That's what I think is going to happen. I'd be interested in taking short positions on this only if I see really incredible setups, and so far I haven't seen anything special. But I'm keeping an eye on this chart because, like I said, this has been very instrumental in dictating price action on many other charts. So keeping an eye on this little baby. Euro USD. So what do we got here? We see long positions increasing from 181,000 to 200,000. Big jump. Boom. Big jump. And that's while we were consolidating down here. All right. So while we consolidated, right before the big move upwards, which takes place right at the beginning of this candle here, the first 3 days, Sunday, Monday, Tuesday, we see a big explosive move of demand, 181,000 to 200,000. But as we moved up, we also saw them increase shorts from 95,000 to 115,000. So, excuse me. So if price was going to continue to move up from here to here, would the institutions be adding short with this move here? Most likely not. They'd be closing off shorts and just concentrating on adding longs, right? So why would they add shorts for the move to the upside? Well, they are coming into a once tested weekly supply, right? So what happens when price hits an already tested weekly supply? It typically, not often, not always, but typically will react to the downside from it. So if they were expecting a move to the downside, shoop, wouldn't you want to add some shorts? Because then you'd be getting a better price on these longs that you're adding. So I think that's possibly what's happening. A reaction to the downside for a potential bigger move upwards, breaking through that supply. I think there's a very good chance that we see that. What we do know for a fact is 63% of their overall exposure is geared to the long side. What we know for a fact is that the coloration of the cells are very much green. And what we know for a fact is net positions is 84,000 positive. So that's a very strong argument for a move like this that's to come. But right now I'm not taking any trades on this because nothing is clear. I'm just speculating based on what I see on the charts and what I see with the data. So I'm going to be watching this one to see how it's going to react over the following weeks. Pound US dollar, this one's a good one. I was waiting for price to drop down here, but instead it just held. It just held at this weekly 20 EMA. We're also within this monthly bullish engulf, so that also gave it the support. But what we see is an increase in longs from 50,000 to 53,000 and a slight decrease in shorts from 59,000 to 57. So shorts are still very cooled off. Longs are still aggressive, but not as aggressive as they were the previous weeks, but that's fine. The previous weeks, right? I think what we're going to start to see is that momentum shift, which we're beginning to see, and then a move to the upside. Net positions is negative 4.5 thousand, but based on the coloration of the cells, our bullish bias has never left us. Okay, and once again, the indicator coming through for us and really giving us an insider look at what the sentiment is with the institutions. US dollar, Japanese yen. Longs increase from 182,000 to 185,000. That comes as we consolidated here at this twice tested weekly supply area. And shorts decrease from 54,000 to 49,000. Long exposure jumps up 2 points from 77% to 79%. And net positions increase from 127,000 to a positive 135,000. So this is crazy. If the US dollar was going to drop, that would be pulling this back, right? That would be pulling this back. So remember, but this is just data at the highs. So we would expect to see that. What I want to see in the next coming weeks is that longs are closing out and shorts are being added to. Because if that happens, then that means it's the beginning sign of a bigger, deeper retracement to this weekly area of demand. So very difficult to trade this chart right now because it's not well correlated with what I see happening with the US dollar, right? We see a lot of bullish sentiment here, a lot, and it looks bearish on the charts. The US dollar looks bearish, so I'm not pulling the trigger on this one right now. I'm waiting to see what's going to happen. When price gets down here, US dollar will probably be hitting that weekly demand area that's lower on its charts too, and then there's going to be a lot of this and that, and then it's going to be very difficult. I think over the long run we should see a price move down here to the monthly demand area, but we'll just wait and see what happens. But that's just what I potentially see happening. Very, very, very big potential for that to happen. All right, Kiwi. So what do we see with the Kiwi? Longs remain cooled off. They just close off a few hundred long positions. Shorts remain aggressive, but they hold off at the 30,000 mark. So overall, 62% of their overall exposure is geared to the short side, and net positions increase just a little bit to a minus 11.8 thousand positions short. This one is a great candidate to take shorts. Great candidate. So I am going to be looking for short positions. We have a weekly supply area that I would love to take shorts at if we get that nice drop down like that. So I think everything is setting up here for bigger short positions to take. So I'm just waiting for that move further down, consolidation, a retrace up, and then I am going to take full advantage of the momentum to the downside. Okay, so that's it. That's all the major pairs. That's all the supply and demand based on the positions of the institutions. This week, in terms of data, we really don't have much coming out. We have some speeches and stuff, but we don't have any interest rates coming out. So it could be a potentially quiet month for us, and that's fine. I'm going to be waiting very patiently on the charts that I mentioned earlier, especially this one as well. And that's it. I hope you enjoyed this video. I hope you use it to make you a better trader, to make some good profitable trades this week. And until next time, we'll see you next week.